Hi, welcome to Stealth Traders webinar. Avoid the mistakes 99% of traders make, presented by our very own master stealth trader, Paul Levine. And before we get started, just a few house cleaning items here, mainly the disclaimer. We just want to let you know that futures and options trading is very risky, and past performance of any trading system or methodology is not necessarily indicative of future results. And with that, I'm going to hand the reins over to Paul Levine.
Thank you, Matt. Just let us know if you can't see my screen, and we'll get right into it. 99% of all market technicians out there have lagging indicators. Ours are predictive here at Stealth Traders. So we like to teach you to be the 1% and not follow the herd. And let's just get right into it. On this last move of the day, I have a 987, and once again, to our newer traders, it works on any time frame or tick. So we'll just keep it on here for a while, because if I change it or reload it, the money velocity here on the bottom will go to 0 and just start over again. So, but preceding this actual move here on the ES, we're in a sideways market, choppy market. Our hyper snapback study has a no sell and no buy zone, which is right in this area. In other words, when it's in between the 150 long zone and the 150 sell zone, we just sit on our hands, we don't do anything. And also you can see that the market is choppy, and we have several bottoming out here, and we can't break our dynamic target line, which are these. We have the green dashed dot, which is a previous session high, because we're in aftermarket now, and then you have an overnight high at 86. We also have the LRC, which I have the historical lines on to show us where if it's tilted, if it's the darkest color, it's tilted down. If it's green, it's tilted up. And then we have, of course, our famous hyper snapback, and then the money velocity. And you also can see here on the money velocity, it's telling you that money is really not being injected anywhere. So our first signal, our first buy signal, I'll just type this in right here. Which is telling us that we have a failure here. We have several bottoms touching the dynamic target line, and price wants to move up. But we're not in the study, we're not in the trade yet, because we need more confirmation. So what I like to do is just call this a wave 1 as it starts to make higher highs. And you'll notice right after this bar, when the hyper snapback study is blue, that's positive. So we can look for a possible entry on this buy signal. And today we're going to show you different ways to manage and also enter trades. So now we have price entering right in here, our long zone. And I'll just make a notation of that for you. And that's above the 150. And we also have an arrow that tells us when it went into the long zone. Just move this in here. And then price is coming down into our trend study. So we don't like to buy in the actual trend study unless you're already in the trade early, which I wouldn't have suggested, although you could start off with 1 or 2 contracts if you're looking at the 987 and lower time and tick. Let's say a 610, a 1 minute even, because those will all cycle up. So if you started your trade, that's fine. But also on this downward movement, which we have a support on our dynamic target line in our momentum study, which is the green here, we also have a white hyper snapback. And the same rule applies to the white, which is, we have the actual dot and diamond right here. So that's our second buy signal. And we know that this wants to fire off and at least go to the 0 line. So this gives us confirmation of a possible wave 3. Now the reason why I'm counting out waves is because our actual studies do it for you. But I just want to make a notation on the actual waves. So I'll just label this. And here's your wave 1. And because as price came down into the actual trend study, and it fails here on this dynamic target line, all failures are wave 2. So we'll mark that. Now, at this time, if there are any questions, you can fire them off because there are some new traders in the room, and if not, I'll just continue. Well, so I guess we're good. So now what we have on price action is we need to break the height of wave 1 in order for this to be a confirmation of wave 3. So we're not rushing into this trade because we want to see if it has momentum to go in the direction that we are looking at, which is a buy signal. So it does break the height of wave 1, and this is your wave 3. Now looking back, you can add on to contracts if you started here. So you have multiple contracts with this actual white snapback, and then it fires off. So you have your confirmation of your wave 3. You have a cluster up, down, and up in this area, which is on the hyper snapback. It's showing you that price on this negative divergence with the magenta has to break the bottom of our band, and it doesn't. So it comes back up and it gives what we call cluster sell. I'm sorry, cluster buy right here on this. And then as you can see in our money velocity, you're starting to see how money is being injected into this buy signal. The blue bars are almost like nitrogen as they're going in, and you can see that there's very little blue on the red side. So we just stay in this trade until it breaks the bottom of our trend study, or if it comes out of the long zone in here. So if we look back at this tick by tick and bar by bar, and this is how the trade actually would have developed. And you can see on the bottom of the money velocity I'll just move this over, how the blue bars are injecting more money into this move, and it starts to go our way. So preceding every move, money has to be injected, otherwise it's not going to go anywhere, either on a downside or an upside. Even this little move down here at 10:30:45, you can see how the blue bars and the red bars are dominant, and it just tails off to the downside. So the money velocity is very important because it can tell you, for example, as we're going and developing this white snapback, and I'll just abbreviate so we know it's a snapback up. Let's go snap back up, SPU. So you know what your support and resistance are on the dynamic target lines here, and as it fires off, notice how money is being injected in, and our money velocity amazingly depicts that graphically. Look at that. That is that too is 80 contracts or more above, and then it starts to take off. So very, very cleanly, you're riding the top of our trend study, which is the green here, and that's going to show that there's momentum building. You can see the money still being injected. Also, we were at the bottom two of the LRC. In other words, the green lines here are stating that the LRC was tilted up. And on this hyper snapback, if you just got in, you're fine. If you wanted to add on multiple contracts because you were eager to get on here early, you were using the multiple time and tick, as it fires off, you're just generating more money for your account. Now on this negative divergence here, we need to break, and notice how it just touches the bottom of our trend study, the momentum study. It doesn't break it. It's also going to want to utilize price distribution. The move won't go exactly straight up. It does here for 11:55 till 12:03, but then it tests the bottom of the trend study, the bottom of the band, and it also tests the bottom of the LRC, and price is distributed right back up. So you could add on here again, or if you missed it, you can get back in. If you miss this whole entire move, you can get in right here. I'll mark that off for you. So that is also a buy signal because it's another white snapback. So this is a snapback up. Buy. So we're still managing the trade. Also, We'll look back where's our stop. Our stop is at the first dynamic target line on this failure of the arrow, which would be 6 to 8 ticks, and I'll put that in for you because you can refer back to this on our channel. Well, this will be displayed for educational purposes. That'd be 6 to 10 ticks. I have big fingers. And that will be placed. This is very important because now, as we talked about before, you're no longer trading with a chainsaw or just firing at things rapidly. You're trading with a scalpel. And I don't even think you take any heat on this move, even from the very beginning. And that's where you would place it, right there. So we're still managing this trade. We're still in the trade. Now there is some selling going on here at around 12:14. So I like to move my stop behind each dynamic target line to lock in money, just in case it would go against you. So your stop is here. Now as you can notice here, we have another white snapback. So at this point here, I'm going to bring my stop to this area and lock in all this profit. I think that's pretty good at 20.75.50 to 84. We'll take that every trade. So let's see if we get stopped out. And that probably will not have stopped us out on the ES because there is slippage there. But nevertheless, even if it does, you lock in all that profit. We try to keep it as simple as possible, but you can see from the actual first buy signal, we methodically went through this trade knowing that we're in a price went into our long zone. And by the way, most other studies, stochastics, RSI, when you enter 80 or 100, they just think you're overbought. That's why these guys here say, well, the trade's already over. I'm going to get out. I mean, why would they do that? That's because they're just looking at historically studies that are just lagging. We don't have that here at Stealth Traders. Any questions on this move? Everybody understands? Okay, excellent. So let's go back. We had hyper snapback here. I didn't have the money velocity running, but we discussed in our other webinar on this move, which is a very high percentage move. I just want to bring that in because it actually shows how to make a quick trade when the market's really not going anywhere here. If you just turn your computer on at 8 o'clock. So as we receive the signal at 7:59, the trade starts to develop over the next minute. So you actually have a 1 minute glimpse into the future. The magenta is telling you to go short. So if you sell on the signal, and you can confirm this by a lower time frame on a 987, you can use a 512, a 333, or a 133 because they're going to be cycling down. And the money velocity would also show, as it does here, it would just started that money is being injected to the sell side of this move. What's nice about this is you can get in early when other people aren't even thinking of going short, and it never reaches your stop, because your stop is, once again, and we'll put that in, stop is 6 to 10 ticks. And once again, nothing's lagging here. You're reading price action without even really knowing it. So if you take this move from 20.7250 down to 20.7075, you just start to move out. You can have multiple contracts, all in or not. As it comes back up and retests your stop, you can take some off and then wait for another signal, because it's not taking your stop. The longer you're in a trade, the more money you make, especially when it's breaking out. And then we have a signal here with our trend study that there's a momentum breakout. And you can verify this on lower time frames. And then as it accelerates down, once again, you have a wave 1, 2, and 3. And I won't draw that out, but you can repeat back onto the recording. Because one of these tops here has to be a wave 1. So we'll take the last one, wave 1, wave 2, wave 3. Wave 3 is always the strongest. And you can see how it's injecting money into the trade. And then we're out right in this area here. And I'll highlight that for you, because we do have a buy signal. Now this trade here, if after you went short and you deposit that in your account, so now you're looking, well, look what we have here at 2066.75. You have a previous session low, which would have been the session low today. So now we know that if price does not break lower than that, what happens? It's a possible buy signal. Because we know that in order for price to go lower, it has to break this dynamic target line. Now we do have a white snapback. However, there's positive divergence on our hyper snapback study, so you cannot go short here unless this was magenta like it is here. So it really helps you to understand price action, and it keeps you out of trouble. We don't like any of our traders to deplete their account. We want you to have a minimum loss as possible. We like to call those profit stops, where you're in a trade and it went 9 ticks really quick, so lock in 2 or 3. And if it goes back against you, because that can happen, at least you have a profit stop. So once again, in this area at around 822, we're looking for money to be injected, which is our first sign of an actual trade to start. You don't see it here, but it's starting to show here. So there's a potential of a long here after this yellow hyper snapback, which is denoted by the diamonds here that we just went over. And what I'll do is, even though the channels tilted down here with money velocity, the blue bars injecting like nitric oxide into the move, your lower time frames will confirm this. And what I'll do is I'll go to, because this move here earlier today was very similar to the move at the end of the day, so we already went over that. What I'd like to do now is to show what lower time frames are doing at around 8:22. So let's look at I'm going to go to a 333. It does show a lot of information. We'll lose the money velocity, but I think you have a good understanding of how that works. That was a trade that we did at the end of the day. So as you can see, this was the actual hyper snapback down, and you can see how a 333 complements that 987. You can even use a 1 minute. They'll all cycle down. So if you had a 333 at 1 minute, and then also all of our, I'm going to actually bring this over real quickly. On the Stealth, this is our website. On the Stealth Scanner page, and these are all different, we'll go over some a little bit later, but you should have all of these time frames and tick set up on charts. You should have a chart for 32, 1597. These all work extremely well. They've been proven for trading in a day in the actual, when the markets actually open up. Cash markets actually open up. If you trade overnight, you would just want to use a 133 tick. These are all proven and they work. You can always contact us. We're here all for you, or anybody who buys anything from Stealth Traders has free education for life. So you should set up at least these charts for time and tick. Matt, did you want to add anything?
No, well, we have the list here that you can see of all the different futures instruments that the Stealth Scanner scans.
That's right here. These are the ones you're talking about.
Right.
Okay, so if you have those all set up, what the Stealth Scanner does, and I don't trade without it. I mean, you'd be ridiculous to not have the Stealth Scanner. What I'll do is let's finish up this move, and then we'll bring in some Stealth scans that were given out today. The one earlier here at 8 o'clock, that hyper snapback down was a scan that was sent to all of our traders, and it was a very successful one. So you don't even have to even watch and have 4 or 5 monitors. We're giving you these high percentage signals, which we talked about on our last webinar. But here we're discussing what happened today in the market, which are trend breakouts, momentum breakouts, and as you can see here, even from a 333, from a 987, how we can get into this trade, because this was actually highlighted from a larger time frame. And then what we have here is we have a buy signal on our hyper snapback study. I'll run through that really quickly. A lot of this is repetitive, but that's how you become a successful trader. I can put a rod and reel in your hand and teach you how to fish, but you have to practice over and over again to become a great fisherman. And it's the same thing with trading. The more you practice and analyze your trades, why did this trade go so long? Why did I get out maybe early? You understand the more and more you do this, the better you get at it. So right in this area here, you have a buy signal. So you have two buy signals, which will be complementing the higher time frame on the 987. So now you're looking how the market is multidimensional when you're looking at time and tick. So we'll put a note here. There's a buy signal on a hyper snapback study. There's a buy signal on our trend study. So now we have two signals. It's like a 1-2 punch. I'll just make a note here. So now you have two confirmations on two different time frames. And once again, it breaks up. It goes above. The bars are going above the trend study. And you would be long at this point here. Starting your trade out, you can put anywhere from 1 to 5 contracts. I like to work up to 10, but that's just my risk reward. Now if you notice here we have, so I'll put just a confirmation buy. And without really even understanding price action, or if you really do understand price action, you can see how this is complemented because there's your wave 1. Now we have a little sideways wave here, but it doesn't break our trend band. So even if you wanted to wait until you get another signal where it goes into our, and I'll mark this off again so you can go back and look at it, because this is going to be on our web channel. We can look at our educational on the Stealth Trader site or the YouTube channel under Stealth Traders. So right in this area, we'll make a notation. This is our long zone. There's the signal as it goes over 150 into our long zone. You're actually on a wave 3. I won't label it for you, but you can understand if you go back to the actual video, or if you understand it now, 1, 2, and 3. And then you're in this trade until here. So even patience rewards you. There's so many different areas that you can manage and stay in this trade. So I'm going to wind it up with that. I think we covered a lot. Matt, is there any questions?
Yeah, there was one question, but I took care of it through the question area. Someone wanted to know if the email signals are only with the hyper snapbacks, and that is correct. You will get emailed when there's a hyper snapback signal on any one of those instruments and any one of those time frames. So the Stealth scanner is scanning 180 charts. That's 20 instruments on 9 time frames, and whenever there's a hyper snapback signal, on any one of those 180 charts, that's when you get an email. You do not get emailed for the regular snapback signals. Otherwise, your inbox would just get flooded. One other thing I would like to add, though, that is if you sign up for the Stealth scanner and you don't want all 20 instruments, you just want a few or however many you want, we can customize it for you. So if if you say you just want currencies, we can do that for you. That's not a problem. So just shoot us an email after you sign up, and we'll set it up however you want.
And just to let everybody know on a final note, what I demonstrated here today, all the studies here are the full stealth mode.
Oh, Paul, Paul, we have another question coming in. What are the order of priority of the signals? What is the strongest signal? Paul, do you want to take that one?
In what I was demonstrating today on actual, well, we did several. We did where they complemented each other, like right here on this screen that you're looking at a 333. We brought it down from a 987. So what you definitely want, if you just have the hyper snapback telling you that it's coming out of the sell zone, which I'll actually mark off for you right here. That would be below so in this area here, this is the sell zone. So as price comes out, this is a valid buy signal, but it's not confirmed yet. Now you have a valid confirmation on our trend study. So it's looking at price in different ways. It's actually helping you understand price action. And we know that we have from the dynamic target line, which is very valuable. It draws out this session low right here. So you know that if it breaks that, it's going to continue on down from this actual trend, but it decides not to, and you're able to, from at least 8:21:23 to 8 within the same minute, know that this is a potential buy signal. So you have a 1-2 punch here, and as long as you're outside of the top of the band, you're fine. Now what makes this even stronger is you can have a hyper snapback down here, which would be the yellow pulling up. So you can wait, like when you get, this is what makes the scanner so valuable. The scanner is constantly sending you signals. Let's say you're looking for multiple signals on the ES or the YM. And what happens is you have, I have hyper snapbacks with the same scenario right here that you're looking at. In other words, the yellow would be firing off. You'd have diamonds down in this area. Does that answer your question?
Yeah, I think that answers the question. The hyper snapbacks are the highest percentage signals. The regular snapbacks are high percentage, but the hyper snapbacks are the highest percentage. So that's the ones that you will get an email from the scanner for.
And you will have hyper snapbacks in the direction of a trade like this, where everything is breaking. If you utilize all the different time and the ticks that we have, you would actually see that. But when they all come together and it's a confluence of different signals, it makes each one stronger. And that's it for my presentation. Best of trades to everybody. May I'll give it back to you.
All right, Paul, we have one more question here.
Okay, go right ahead.
Why are there red dots and a green arrow to open a buy?
Why are there red dots and a green arrow to open a buy? You look at the chart that we're looking at right now?
I know that's the question. I mean, the red dots and diamonds are the hyper snapback signals. The green triangles, the green and red triangles indicate when the trend line enters and leaves one of the
The long zone. So
the long
I
zone and the
understand.
short zone. So where Paul is pointing there is a green arrow means that the trend line is entering the long zone. Red triangle leaving the long zone. Down below, red triangle entering the short zone. Green triangle leaving the short zone. These are just signals that help you when you want to trade. Just one of the many signals or confirmations that you can check when you're going to be entering a trade.
Just to add to that, I said earlier in the presentation that if you look at a stochastic or RSI, when they have these zones of 80 or 20, we calculate this at 150, that people think it's overbought. And you can see just on this 333, that's why you're getting shorts here. That's why you have a red bar. They're going short because they have bad studies, they have lagging studies. Ours is saying until it leaves this long zone, it's going to make new highs. And look at it, it's right there in front of you. It's not, the market's telling you that. It's making new highs. And then when it leaves this zone, you can see that it's coming down, and it eventually just gives up the trade. I hope that answers your question. And once again, we're here for you to if you buy stuff from us, all of our stealth mode or anything, we also have one-on-ones. Like I said, education is very, very important. We want you to become the 1% of all the traders in the trading community. When you enter the arena for trading, you need to know what you're doing. You have to have the tools to make the right decisions, and we give them to you.
Right, and as Paul was saying, if you purchase the full stealth mode, which is a specially priced package of all 5 of our indicators, that will come with a free half-hour live market training session to help you understand how to use it and to trade with it, to maximize your trading capabilities.
And also, man, you can see here, I moved my mouse by accident, and here's your hyper snapback, the highest percentage signal. It's right here on the left corner of the screen. This was the previous question that was asked. Right here. So this would be emailed to you saying that this downward move here, and you could trade a 333 if you need to go walk your dog or you only have a half an hour or less. You have this signal. I want to just try to get some of it. So you have your diamonds represent the yellow. So this is the highest valued signal, and then look what happens. You get a second signal. That's pretty powerful, and that's why this whole move went up. So there's your answer. At any time frame, any financial instrument it'll work on. Back to you, Matt.
Okay, thanks a lot, Paul. Okay, everybody, we'd like to thank you for joining us. And as a special gift to you for attending this webinar, we'd like to give you 20% off all indicators. Now that offer is good for today. I'm going to put the discount code in the chat area. Hold on, typing it now. So you can use that discount code when you check out. If you purchase any indicators today, they'll be 20% off, and that's today only. It must be used by midnight Eastern time tonight. And it's also good if you tell your friends, they'll be able to use it too, today only. Also, we ask that you follow us. We have a great blog on our website, very informative. We usually feature 1 or 2 of our indicators, and it's just more training and education to help you trade. Follow us on Twitter. We're tweeting all the time. And also check out our YouTube channel. where we will be posting a recording of this webinar, and you can see our past webinars and also other videos on our indicators. And we ask that you please like us on Facebook. Also, we're here to help you become a better trader. Please don't hesitate to contact us at any time. You can reach us by email, contact@stealthtraders.com. The phone number you see there, 818-927-1250 here in the U.S. And reach out to us on Skype if you like. A lot of our foreign customers prefer that. Just reach out to us on Skype, stealth.traders. And of course, you can visit our website at any time. So with that, we'd like to thank you for attending. We plan to have more upcoming webinars, either weekly or bi-weekly. So check the website to see when our next webinar is coming up. And also, if you'd like to see this recording, it will be on our YouTube channel shortly. And we'd just like to thank you very much for attending the webinar. And as we like to close, we like to say, best of trades.